Hello, everyone, and welcome back to this week's session of TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options. Most of you are likely familiar with me by now, but if you're new or joining us for the first time this evening, welcome. It's great to have you on board with us. We're very excited to have our customer or subscriber base growing and evolving over the years. So let's get right into the housekeeping details and then into the good stuff that we're all here for. So first and foremost is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously and you've seen this, the main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We have this available on our website, so please feel free to read it in detail there at any time, or take a screenshot of it now if you like. That's the main point to take away. I'm going to leave this slide up here just for review on the Q&A process once we get to that portion of the session. Other than that, Netflix seemed to have a good earnings report and offers cautious guidance, yet still the market goes up after hours. I don't know really what that says about the market, and I couldn't really comprehend what to take away. So hopefully Rob will be able to shed some insight there. I'm sure he will be able to shed some insight on a lot of topics this evening. So without further ado, the man of the hour, Mr. Rob Roy.
Thanks, Zach. Hey, everyone. Welcome to this week's Trade Finder Live. I wanted to kind of make a quick comment on what Zach said about Netflix. Yeah, I'm not sure what that says about the market itself, but there's this viewpoint now that Netflix is the king of streaming. And even though they issued cautious guidance, which caused a little bit of a whipsawing, initial move to the upside on the earnings, and then kind of back down on the guidance and then right back up again. So we'll see if that can hold into the open tomorrow. That's the key. All this after hours stuff is fun to watch, but what really matters is what happens at 9:30 a.m. Eastern time. All right, so taking a look at our market, we did finish to the upside today. A couple of small consolidation bars after the break above 480. So that's key. And if we can move any further, I think you might see a day with a big spike as the shorts step in. So far, they haven't really come in and covered, or you'd see a big bar similar to the one that broke above 480 back on the 19th. So if they do throw in the towel, you'll know. It'll be a big up day. So can we hold it? Can we come back and test 480? That's right where the 10-day moving average is now. So it wouldn't bother me if we tested 480 and then move higher. I think that's still constructive as far as a continued move higher. But if we broke back down below 480 and then followed that through, then I think we have to take a look at perhaps the start of the wave 4. For those of you that are new, not familiar with this software, it's from the Hub organization. You can find out more about it at hubb.com. It's called Private Source. I think it's the best Elliott Wave software on the market, and I'm a big Elliott Wave fan. I've been trading it since 2001, and I promise you I'd use whatever I felt was the best software for Elliott Wave. When we take a look at this 4 here, that doesn't mean the wave 4 is underway. These are time and price projections. That means if the wave 4 were to start, that's where you can expect to find some support before a possible bounce up towards the wave 5. Also, when you're in a wave 3, for whatever reason, the algorithm, and this is programmed exactly as the algorithm was written by Ralph Nelson Elliott himself, likes this price just above 500. And when you're in a wave 3, it can run to that price before starting a wave 4. So basically what the software is saying is it sees the market trading up towards 500. It's just, do we correct first and then go, or do we just continue on power on and then correct? So that's the key there. Take a quick look at volume, and you can see volume did drop off quite a bit today. We did have really solid volume on the break above 480, and that tells you clearly the shorts, they're not worried yet. So you'd see a big volume bar, like something like this over here on the 15th of December if the shorts cover. So what do we make of that really weak volume today? Perhaps the market is just waiting for more earnings reports to come out. Perhaps it's waiting on the GDP report and the PCE, the Fed's favorite indicator that comes out on Friday. We'll just have to wait and see. But not bad consolidation action here after that big break above 480. Looking at interest rates, rates did kind of move back up today? Are they just filling this gap, but we move back to the upside, but it doesn't really matter unless we take out this wave 4, and we didn't quite make it to the 38.2% corrective level on that wave 4, so even a little bit move higher on rates wouldn't be a real bad or negative thing. But interesting that the market still finished to the upside with rates moving higher. We'll see what effect that had on the Qs in just a moment when we get there. But we'll look at the dollar first. Weird day today on the dollar. You can see this big outside bar. And when I talk about inside bars and outside bars, people have asked, what does that mean? Well, an outside day is when the high of the day exceeded the high of the previous day, and the low of the day exceeded the low of the previous day. So this bar here, and actually the last few bars, are all encompassed within the high to the low of this one bar. So is it meaningful? Some people feel that you see inside and outside days before a change of direction. It's not necessarily a meaningful change in direction, can just be short to medium term. But oftentimes after one of those days, there is a movement in that security that you're watching. So we'll see what the dollar does in tomorrow's trade. Looking at the VIX, if you're bullish on the market, this has to make you a little bit nervous because we broke back down below 13 today. Now, we are in a 5-wave pattern, and yes, you can label the VIX just as well with an Elliott Wave pattern. It is a chart. But getting to this low area here has not been kind to the market. In the past, we have gotten as low as 12, but usually when we come down into this corridor, we get a little more volatility in the market, and that usually means the market goes lower. So are we going to break below this wave 3 that was set back in December? Yeah, you understand in December because it's a low volatility time anyway with the holidays. Anytime between Thanksgiving holiday and Christmas holiday are usually lower volatility times. But it'll be interesting if we do make it down to 12 above the 480 level. So we've been down here to 10 before, if you're wondering, is 12 like a historic low? No, we've been down to 10 or 9 before. Doesn't happen very often, though. It's kind of a rare occurrence. The market's still clearly looking ahead towards Fed rate cuts. I think that PCE deflator could create some volatility on Friday, depending on how that number comes in. GDP maybe as well, but I think the PCE deflator, as far as the Fed's concerned, is going to be slightly more important. If it's not showing signs of inflation staying down, we could start to move away, which I don't think is going to happen anyway. As I've said numerous times, the March Fed rate cut that's priced into the market. The market feels there's going to be one in March. I'm not in that camp. I think the Fed will be late to cut rates. I think the market might be a little disappointed by that, but I've been wrong before. So we'll see how it plays out. But I think Friday's data will give us a bit more information. So we looked at our live show over on the Hub Financial channel on Friday, talking about this level here breaking above 480 and whether or not we were going to get follow through, and that we would be talking about it tonight. And so that's a little bit of follow through there, but not enough to create the short covering, as I said. All right, so here are the Qs. Decent day out of the Qs, even with interest rates ticking back to the upside, but we had kind of a vertical sprint here for 3 or 4 days. So again, going sideways is the norm. There's the 10-day moving average running, trying to play catch up there to that movement on the Qs. And we are within the wave 5 tap box. Interesting that we're labeled in a wave 5 on the Qs, but still in a wave 3 on the SPY. Usually the markets kind of come together and they all read the same thing eventually. So it would be a while before this 3 turned into a 5 on the SPY. So are we going to see a relabeling of the Qs and this 5 turn into a 3? Some people think so, based on comments on our YouTube video here at the Elliott Wave options page on YouTube. But we'll see. We're a little bit of resistance here, as you can see, but it was such a vertical move. I was just impressed that it wasn't more of a down day with the tick up in interest rates. Looking at the IWM, that always marches to the beat of its own drum. We're in a wave 5 here. You can see the 4 is set up. Still technically in the 4. We haven't labeled the 5 yet, but this bounce to the upside was met with a little bit of selling today. but we look at the 10-day moving average, and you can see we stayed above the 10-day moving average. For those of you that view the small caps as a measurement of risk, some people do, you would say, oh, okay, well, that kind of plays into the fact that volume was lower on the SPY today. Not a lot of people with an appetite for risk. That may play into the market the next couple of days until we get those economic reports. So a little bit of a tick down on the IWM, but a well-constructed 5-week to the upside pattern, though. And if the IWM continues to move higher, that likely means that the SPY and all the other markets go right along with it. So let's take a look at the Dow. The Dow is in a wave 3, just like the SPY. So the outlier there is the Qs in the wave 5. So again, do the Qs relabel to a 3? You could see it with that vertical move. So perhaps if the Qs can continue to move to the upside, we're back to the Mag 7, as you know. I'm sure you've heard it on the financial networks. At the beginning of the year, they switched it to the Lag 7 on the little bit of a pullback we had to start the year, but we're back to the Mag 7, leading the market to the upside again. And a bit of follow through with the DIA. And can it hold this little breakout above this range right here is going to be the key. We're kind of testing that breakout move here that occurred back on the 19th of January. We haven't really tested it on the SPY, but we're testing it on the Dow, on the DIA at least. So we need to hold in this area here for the Dow to still stay in the bullish camp. Getting back above 380 would be very bullish on the DIA. All right, so moving into some of our favorite stuff to talk about, Bitcoin is struggling. It's down here at a 46% correction. At the time of this recording, it's trading just under 40,000. So this is an area where I've mentioned a few times here recently, really would be constructive for it to hold. If you're a believer that it's going to rally into the halving that comes out, April 18th is the presumed date of that occurrence, then this is the area for it to hold. It needs to turn and move back to the upside here relatively soon. If we start to break down into this area here, right in through here, there's, these are higher lows. So it could find support anywhere along here, but it could also come all the way back down here. So you could see Bitcoin all the way back down to 35,000 in a short period of time if it doesn't get its act together and turn around and head back to the upside. You can see the algorithm does like Bitcoin to get above 50,000. On the Friday show on the Hub Financial channel, the host there is a big crypto fan, similar to how Zach is, and he sees Bitcoin crawling up to 66, 69,000 prior to the halving in April. So he's going to be right. It probably needs to turn and get its act together here in the not too distant future. As you know, we've been marrying Coinbase with Bitcoin because everybody asks about Coinbase. An interesting day today because it got a downgrade. So Coinbase gets a big downgrade. It affected it for the shortest period of time. And as you can see, it still finished down on the day, but well off the lows and off of where the open was. So even though it was a down day, it still stayed above 120, which I think is the area that Coinbase needs to hold. We're right at that 61.8% fib corrective level, which acts as support as well. So you got a pretty strong fib level. You got support from back here in July. If Coinbase can't hold here, then it's yikes. We might be talking about 80 or so. No, don't get excited, Zach. It's not quite a Katie bar the door event, but that would be a significant move to the downside if we can't hold 120. It would seem odd that the stock makes such a run and then gives so much of it back. So I don't know. You kind of look to see if it can hold in here. A lot of people feel that the crypto ETFs, Bitcoin ETFs, are a negative for Coinbase. I think that remains to be seen. How many people actually subscribe to the ETFs versus actually trading it, et cetera. It's going to be interesting to see how that all plays out. A few of our international markets to look at. Australia, friends down under, having a nice little run here over the past few days. We got down into an area that kind of needed to hold. All right, about a 50% correction in that wave 4, as you can see. Also an area that we've traded through there at 23, going all the way back to spring. You can see that we came down here in February and have been kind of just trading right through that area until August when we broke below it. And then we kind of snuck back up here, broke above it. Now we're testing it. And so far, the test has been successful. So we broke below 23, no follow through day, right back up the next day. And it looks like a well-constructed 5-wave pattern on the EWA as well. Germany, the EWG, kind of similar pattern here, a little zigzag right there in the wave 4, which is always nice to see those. A lot of people I don't think are quite aware that you can see one of those in the that's typo there. It's not a 91% correction, obviously, but you can see we came right down to the 100% extension here, exactly where it's supposed to go. Should be a 61% correction there, and then ready to move back towards this wave 5 high. You would want to see, I think, if you wanted to be long the EWG, might wait and let it break above 29, just add in a little caution there. Make sure it can get above there first and that this isn't rolling over to make a lower wave 4. But so far, so good. Just would feel a little more constructive about it. It's a slightly more conservative view, but if we got back above 29, and then the INDA, the powerhouse that the INDA has been for over a year, saw a little give back today. Kind of a big move to the downside on the INDA. There's been a lot of job owning about how the INDA is priced for perfection and be ready for a downside, etc. And it's not really any sort of a wild guess out there with the run that it's had since March to see a bit of a corrective move. We had this sideways move. I've highlighted this before for those of you that are not necessarily big Elliott Wave fans yet. You can see this is a big, huge flat here. And so you look at that, and then you see the zigzag means that was a complex C wave in the flat as we move down through this area right in through here. Also exactly down to the 100% level. So we had a consolidating flat here in the middle of this big, huge wave 3 run. So it's been a great run on the INDA. A little bit of give back I don't think would be too negative. Breaking below 49 is definitely significant. So we'll see if it gets right back above it tomorrow or if there's follow through to the downside. Now, if it breaks to the downside here on 49, then it does get a little dicey. Then perhaps we're looking at 47, and that's not great support, but there's a little bit there. And then if it doesn't hold there, then we're all the way back here to those flat tops. Sorry. Down to that 45 level, and that would be a pretty significant move. But look where that is. It's also where the wave 4 projection is. So if we are starting the wave 4 correction, and we haven't labeled it yet, or the software hasn't labeled it yet, and that's another point I wanted to make. Oftentimes you guys will say, I don't agree with your labeling, and they are my labels. It's the algorithms labels. I just do my best to interpret what they're saying for you. But I don't put these numbers here. The algorithm does it. It does it automatically. So you just turn on the Elliott Wave button. You don't want it on, you turn it off. So the algorithm puts those labels on. But interesting that the wave 4 target price happens to be right at that 45 level, which is where that whole correction went through the summertime on the INDA. So we'll see how that works, how it continues to play out over the next few days. A move down to 47, I think, would get people's attentions. It's not the end of the world, but a break of 47 does change things a bit. And then you start looking for that, where's that wave 4 correction level going to end up? All right, so a couple of the case study considerations that we've done here on TradeFinder over the past couple of weeks. We didn't have many left. They all worked. And if you are new to TradeFinder, I invite you to go back and look at the past recordings over the years and look at these case study considerations and see how well they've performed. I mean, the record is pretty phenomenal on the case study considerations. So the one that we looked at back here on the 9th, 2 weeks ago, you could see that NVO had broken above 105. That was the key level right here. We had this big, huge ascending triangle in that wave 5. So we broke to the upside there. You can draw that line anywhere through there. But you get the idea. The resistance was 105 and then a whole bunch of higher lows. So an ascending triangle does look like it's broken to the upside. If we bring it forward to now, you can see the day that we had today, open lower, looked like, oh, we're going to give up 105. That changes everything, and it does. If NVO breaks below 105, then we have to relook at this as far as a bullish stance. But it rallied back, and check out this volume bar on NVO. Big volume on this. So where was the volume? On the early selling? Was it on the rally back to the upside? You got to watch the intraday charts to see that. But the fact that we closed near the high of the day on good volume is normally a bullish sign. But we'll be keeping an eye on, that's the key on NVO, is the 105 level. So we'll be watching that really closely to see if we can stay above that level. That's very important. As I said, if we break below that with a follow through day, then that ends the bullish thesis. And that means that wave 5 might be complete. And that's the end of the move. The breakout of 105 was significant. The rally back to the close today was significant. But again, none of that matters if we close back below 105 tomorrow. It's just that's today's reading on big volume. And then we looked last week at Google. We did send this out as an alert. We have NVO as well for our alert subscribers at ewotrader.com. That's the difference between EwoTrader and TradeFinder, is the fact that we have an alert service. So we send out information on entries, exits, any adjustments that are made, all those things come into play on our website, ewotrader.com. So you can take a look here. Here's an example on Prudential. And this was a really good, you wish they all worked this way. They don't all work this way, but this one, it just took off. And in 2 days, nearly an 84% gain. Just boom, boom, right to the upside. We had one heck of a December. You can see it never really went negative, 2% on one day, and then the next day off to the races. But this is all the information that you get at ewotrader.com. Every single alert that goes out has a page like this. It's identified with the trade ID, the stock symbol, what the trade was, which of our portfolios it was in. The impulse strategy is our directionally based strategy. And you can see the entry, and it gives exactly what the strike was, etc. You get a chart with the projected move to the upside, and then you also get the alert that goes out on the exit. And if you notice, we didn't quite make it to the 110 level. So why did we take it off? Well, first of all, we're going to take 84% in 2 days all the time. But we had 2 big vertical days with a gap. So we were overbought short term. Infuses implied volatility into the call option. The stock could come back down, meander around, and then eventually go up to 110, and the option not necessarily make any more money because all this volatility would come out of it. So when you have these big sprints up, we have a big up day, a gap up the next day, the calls get infused with implied volatility, and that allows the gain to be even stronger. So great information on our alert service over at ewotrader.com. Check it out. All right, so back over here to Google. We looked at this, as I said, last week, and that was sent out as an alert also. And the key here, the note that I made when we looked at it last week, was we're going to stay bullish as long as it stays above 140. And so far, nicely working for us here. Nice little gain so far in Google Alphabet. Still can't get used to calling it that. It'll always be Google to me. And then a pretty good run here. We're starting to get a little bit vertical. We see we got too far away from the 10-day moving average on the high yesterday, so we came back a bit, but then followed through back to the upside today. So nice move. We're still a little separated from the 10-day moving average, so even a move back down towards 145 wouldn't make me nervous. We wouldn't want to see it come down and test 140 again, honestly. But if it did and still held above 140, that's still okay. But it wouldn't feel okay with the fact that we closed at 148.68 today. You wouldn't want to see it trading back down to 140, even though technically the pattern would still be in play. So we'll see if we can get a little more follow through tomorrow. We're probably going to be out of this. alert, we'll probably go ahead and take that off. We're in an 80% extended move on the wave 5. Now you look at the DMI, still looks very constructive. Little bit of a tick up on that negative directional indicator that we'll watch. But the ADX is showing strength here. There's still good separation between the two directional indicators. So we'll keep an eye on all that stuff as well on when you're having a wave 5 extend like this, because the wave 4 was only 32%. So 61.8 was all we were looking for. The move from 61.8 up towards an 100% extension is where we bring in the DMI to see if that's likely. Again, this point in time, the DMI is still supportive of a continued move higher. Another sideways day or two to let the 10-day moving average catch up would probably be actually healthy, because you don't want it to really try to run when it's already overbought, because those moves don't hold. When you take off and run and you're in overbought condition, they get reversed and they come back down. We wouldn't really care. We'd be out of the trade, but just if you're a longer term trader of the stock, then it would matter to you. But I was excited to see this show up on the list last week because, as you may have heard me say before, over my years of trading Elliott Wave, Google has been #1 as far as, I mean, it just always seems to be in an Elliott Wave pattern. So I've had more trades on Google than any other single stock. A lot of them are close, but Google is out in front. It just, like I said, always seems to be in some sort of an Elliott Wave pattern. All right, so that's an update on our two, what you would consider open alerts here, or case study considerations. Let's see if we can find one for tonight. So looking at the pre-computed list, as you know, I don't do this ahead of time. I do it with you because I feel like that's more informative, and that's the whole point of TradeFinder, is for information. And wow, by the way, see these EWOs here, Elliott Wave options? Those are my searches that the folks at Hub have been kind enough to program in to this software. So if you're an alert subscriber and a holder of the software, you get my searches. So you see what I look at every single day. There's 10 of them. That's a lot. Normally we're in the 4 to 6 range. We did have one day a few months ago, right, Zach, where there was like 20 of them or something, which was unheard of. So it filters out. Yeah, it filters out the majority. So you don't have to go through chart after chart trying to find trades. You just go, boom, click on that button, and there's the 10 stocks right there that show up. So let's see what we have on the list. Repligen, which I have no idea what that is. Look at that. Somebody asked about this last week, didn't they, Zach? Plab, P-L-A-B, Photronics?
Yeah.
That on Friday, but I feel like it was last week. And now it's on the list. How about that? So maybe we'll take a look at that one. And then coming down, a few names I'm not familiar with, but there's Intuit, nice, and then MSCI. So Toro, that you would think is constructive from an economic standpoint. We'll see what that GDP report says. But let's take a quick look at PLAB, since one of our viewers asked for that last week.
That would be SP, just to give a shout out there.
Oh, okay. I have too many windows open. Zach, you got to remind me of that. The software has
windows open.
Yeah. The software has memory, virtual memory, just like your computer does. And so when you get too many windows open, it says, nope, we're not going to show you that chart until you close some stuff out. So let's give this another go here. And come back up with PLAB and see what that looks like. I'm anxious to see what the chart shows. And well, there you go. Since last week, it's had a nice move. I think we talked last week that it needed to kind of hold in this 29 range, which it did, and it's off to the races. It's in a wave 5. It looks like it wants to see 36, little bit vertical now, and had just a touch of resistance at that wave 3 high on the high today. So kind of a ho-hum day, closing pretty much in line with yesterday's close. But let's look at the 10-day moving average. I would imagine, yeah, there was some separation there. This is what I'm talking about. It couldn't break above this resistance level because it was already overbought. So if it's able to do it, it doesn't hold anyway. So you might as well go sideways and consolidate, let that 10-day moving average catch up, and then take off. But that looks like a pretty strong move. And the DMI has reset itself. ADX curling back to the upside, and so it does seem supportive of the stock breaking above this level here at, it was at 33 and going up towards 36. So we close at 32.06 today. The high was roughly 33, 32.96. So maybe another sideways day or two before a move higher, but that doesn't look bad. That's really interesting that something somebody asked about last week shows up this week. Let's look at Intuit. Nice little move off the consolidation there. Still in a wave 3. Let's see what the DMI looks like with that little corrective move. Almost the identical chart there, where we have come down and we're curling back to the upside. Still in a wave 3. Let's see what the CCI, only still room to run on the shorter term basis. So Intuit looks pretty good. Gosh, that is one long wave 3. So let's take a look at this zigzag pattern here, see if that can give us a price target. So when you're in the wave 3 and you want to know where can the wave 3 go, because that's always the key, you look for a zigzag. And there it is. So it was a weak pullback on the B wave. So you're only looking for a 61.8% extension. So roughly up towards 680, which is still a pretty nice move. And then we have the 10-day moving average curling up. Perhaps Intuit makes it up to 680. That looks pretty good too. So those two both look in play, I would think, as far as case study considerations for this week. Jacob Solutions used to be JSI, moved over to the Dow, so now it's just symbol J. And you can see that it's this is when it gets confounding. The search results come from my confirming indicators. So my confirming indicators are showing strength to the move, but the Elliott Wave pattern hasn't disqualified yet, but it's awfully darn close. We're right at resistance here at 135. And Elliott, if he was here, Mr. Elliott would say, you know, once you pass that 70% level, even though acknowledging that you could go as high as 78.6, because that's the last fib level for a corrective move like this. But once you pass 70%, high percentage of the time, you're under 78 anyway. So we'll see if that, I would want to see this break above 135 and fully disqualify that pattern. So it's not really a consideration in my book. And let's see, DCI here, Donaldson. Oh, nice zigzag there. See if that's in a 5-wave pattern. And it is, with a really nice wave 4 correction there at 61.8%. That looks awfully strong. The DMI resetting up here as well. Oh gosh, there's 3 of them that look pretty good. Coming down through all this area of congestion back in here in the summertime is where it held. And that strong fib level, if you had to be really picky, always give try to give aggressive or conservative view, because everybody has their own risk tolerances. If you're aggressive, you jump in now. We tested the 50-day moving average. We're on a strong fib level. We came to an area of good support. You would say that I'm a believer that we're going to break above this level here at 66. If you're a bit more of a conservative type, then you would want to see it break above 66 first before you came in. But the algorithm does like that price up around 69 for that wave 5 move. So again, aggressive, you take a shot now. Conservative, you wait till it gets above 66. Let's see anything else we want to look at. Look at AME here. Ooh, man, it is really wanting to break above that 165 level there. And if we look at the DMI, it's trying to reset up again. Might not be as well formed as the others, but slightly suggestive that we're going to break above 165 and run up here towards that 172 level. But I think we'll come over here to Photronics or Intuit for our official case study consideration for this evening. And I'm going to go ahead. Uh, that one looks pretty good. So if you like that one better, you can keep that in your own log. But I'm going to make Intuit our official case study consideration for tonight. So for 123. We're going to say INTU up to 680 is what we're looking for. And that should occur within the next couple of months. It should make it up there. I doubt it'll take that long, but give it a little bit of time. It's not that overbought, so I doubt it'll take that long, but we'll give it that much time. Market never goes in a straight line, at least not for very long, other than NVIDIA, which just never seems to want to come down. So that's the official case study for tonight. INTU up to 680. And Zach, gosh, got through everything quite early tonight. So a few extra minutes for Q&A this evening.
Well done, sir. And not only did you achieve that, but you saw AME was on the list there. That was a question from Curtis. So again, just goes to show how informed our subscriber base is.
Wow,
and then
2 for 2.
as you're
That's crazy.
yeah, and just wait. And as you're going through the rest of the case study considerations, Will mentioned earlier that he liked Intuit, and that was before going through the rest of them. So I said, great minds think alike. So it's just cool to recognize, acknowledge those moments, I feel. But let me not waste any more time on the
Well, I got to make a comment on that. I mean, that's what makes TradeFinder so much fun is the viewer base that we have is already really knowledgeable and asks such great symbols and stuff. So yeah, I mean, it just adds to the enjoyment of doing these.
yeah, absolutely. So let's check out ARM.
All right, let's take a look. And pretty strong. We are at some resistance. So, gosh, I'm not even sure I could give you the aggressive and conservative one here. If you're long, I wouldn't get out. It depends on what your stomach is, your risk tolerance. But as long as it stayed above 70, I'd be okay with this. But if you're a bit more conservative or wanting to get into it, if you're interested in getting into it and aren't already, I would let it go ahead and break that 80 level first. Just, Missouri, show me, as I say often. So the pattern looks good. The DMI looks like it's still got some strength to it. A little bit of a give back today, but it's overbought. And again, a perfect example of the theme that we've been talking about tonight. You got a stock that ran to resistance at the wave 3 high. It was too far away from the 10-day moving average. Say it with me, everybody. No security in any time frame gets very far away from the 10-day moving average. And so it backed off a bit. And if it finds its footing here and turns and goes back above 80, I think it looks really good. But let's let it break 80 first.
Let's check out RUM, RUM for Manuel.
All right. Good old Rumble actually was talked about this morning, and you can see why with that move to the upside. Now, the key here, as we've talked about, and we looked at this stock, I believe, last week or so, or a couple weeks ago, was the fact that we were holding in this level of 5 and starting to break down below it. And just as a reminder, the importance of the $5 level and the $10 level. If you're an investment objective is growth or growth in income, you can own $10 stocks, double-digit stocks. But in order to own stocks between 5 and 10, you have to have aggressive growth as your investment objective. So that would be mutual funds, other type of investment companies. So you can see that there must be some institutions that are in this, and they didn't want to see it fall too far due to the fact that if you study, and I used to know how long it is, and it's changed, and I don't remember exactly what the time frame is. So this wasn't an earnings event, or was it? So back in November, no, it wasn't an earnings event. But it certainly was being talked about this morning on the financial networks. So I would imagine there was pretty good volume behind that. And there you go. That's institutional buying. So that's what tends to happen. People saw this yesterday. Any shorts covered. So when you have a day like that with that kind of a bar, that's a combination of buying and short covering. So they saw the writing on the wall yesterday with this move up. And that was probably some institutions coming in to support it. The shorts realized the institutions are going to short it. They're not going to bail on it. So they bought, and the shorts covered today with a little more buying. With that kind of a move, there's no way I could move in now. I just can't chase this kind of stuff. But if it can consolidate for a while, it's at some resistance back here from the end of summer. August is where it hit the high of the day. And then maybe if it can get above that, hopefully with a few days of sideways stuff here, consolidate a bit, let the 10-day moving average catch up to it, re-energize, gain some new momentum, break above 7, and then it may give 10 a run at that point. But the good news is if you're long, the institutions came in and supported it. Otherwise, it just falls off a cliff if they bail out of it. But they didn't. They supported it, so they like the long-term story here. So yeah, that one was certainly in the news today. So another kudos to our subscriber base, viewer base.
Absolutely. And speaking of being supportive, we need to just take a moment and thank everyone for joining us live. We really appreciate it. And if you could smash that like button for Rob, it goes a long way for our algorithm and everything that else is now essential in this virtual world. We do deeply appreciate it. So that was just
Absolutely.
a cool intermission. Let's go over to PCAR for John.
An old PCAR. PCAR, PACAR, whatever. Nice move. Hit the wave 5 target today. So it's breaking above that wave 3 with the setup. And this is the kind of volume that you want, where you see just good, solid, above average volume. Nothing crazy. Good, solid, above average volume. That leads you to believe it's going to continue. The DMI is well set up again. So maybe we get a little bit of sideways stuff here at 100. Obviously, a good earnings report because it had earnings today. I think that this stock is poised to go higher. So yeah, that's a good one. Good day today, and I don't think it's done yet.
All righty, moving right along. Let's go over to LCID. Looks like there's possibly some short squeezing going on, according to Bravo.
Yeah, well, Car and all the other ones. This is a little bit different than what we saw with Rumble, right? It fell off a cliff, and we're getting an oversold bounce right now, is what this is. This is not institutional buying yet, and the shorts aren't quite nervous enough. So I'm not sure this is short covering yet. But if it continues higher, then you'll see one of those big bars like you saw in Rumble as the shorts do cover. So tried to get a little bit of movement here back in December to get back above that 5 level, but the resistance held. The shorts won that battle. We'll see if they win this one or not. Right now, I just think it got a little separated from the 10-day moving average on the downside. So that works both ways, right? Whether we're lower than the 10-day moving average or above it. And we've come up and tested that. So far, the shorts aren't that nervous, but they could get there. I've talked about this before that, yeah, I really like the car a whole lot better than I like the stock. Maybe they survive. But they've got some work to do to get above 4. There's a ton of resistance right there where it tried to hold and it couldn't. So it tried to hold that, tried to break above 5, got turned back and just gave up 4 and continued lower. So I think this is just an oversold bounce, and I would have trouble going long. You might have a tradable move all the way up to 4. You may very well, and you might catch one of those big days like you saw on Rumble. One of our subscribers asked in the past about SMCI. I'm sure everybody's seen what happened with that. yesterday. So every now and then you get one of those, and we'll see if this continues back up. But for me, it's got to get back above 4, back above that 50-day moving average to look at going long. But you might have a continuation on this oversold bounce back up to test 4, because you can see once it broke it, it never really tested it. It just kind of broke it and kept going down. So there could be a tradable move here from 3 to 4, but for me, I'd want to see it get it back above 4, and then it'll have some trouble at 5 again. But if it could get above 5, maybe that's when you'd see one of those big old huge short covering bars. But yeah, we hadn't looked at that one in a while, so
Yeah,
maybe
no,
we'll
that's an
do
interesting
catch
chart.
back
When
up
you
on it.
mentioned that you like the car, but you didn't know how much you liked the stock, that just rung a bell in my mind of that documentary that first came out of the pirate that led the meme stock Wall Street Bets group, was saying I like the stock. That was the catchphrase. And now there's a movie on Netflix called Dumb Money that just came out, and started watching
Yeah,
that.
I saw that. I saw that. I meant to mention that to you. I'm glad you brought that up.
Yeah, I'm digressing here.
That
I
was
was
some of the
looking over.
discussions, since you brought up Netflix again, they were talking about that after hours on the networks with they're doing a good job on I've been waiting for this for a while on catching the, login sharing. They've been making some headways there. They've got great content, was the conversation, but with the writer strike and the actor strike and everything, it's taking them a while, for new content. But some of the commentary was there that some of the homegrown, Netflix basically produced content has gotten better and better. And so, I mean, just everybody seems to love Netflix right now.
All right, we got another
Anyway,
one of
didn't mean to
our
get off
usual suspects
that
here.
one.
Let's go over to Tesla. Thoughts
Yeah.
for earnings
Well,
tomorrow. Daily
yeah.
RSI low, but in a danger zone as it needs to hold, according to Robert.
Yep, he is correct. We talked about this a few times. I think we've just been really on top of this. I'll take that earnings off. But if it broke 240, it was going to see 220. And then if it broke 220, it's in danger of going to 200. We'll see what Tesla comes up with their earnings report tomorrow. I'm sure Elon will have some pearls of wisdom to go along with it. But that 200 is danger zone. And I think this one would be, Zach, if it broke below 200, that would be one of your Katie bar the doors right there. Let's look
Mm,
out below, because yeah, we're probably looking at
even with
160.
Elon in the mix, huh?
Well, it's got to break 200. So, I mean, if they have a good earnings report and it gets back above 220, then forget all the negative stuff. It's just, how much higher can it go again once it breaks back up? I would want to see it break back above 240 on Tesla to get real excited about it. But I could do that tomorrow on a great earnings report. It is in danger zone. Whoever made that comment is 100% correct, because if it breaks below 200 on its earnings report, then yeah, I think we might be looking at 160. It could get pretty ugly.
Yeah, no, that's a fascinating chart, and that was Robert who called that out. So another fellow Robert.
Yeah, good name. And
All
this
right.
is I mean, sorry not to cut you off, Zach, but we had this big, huge descending triangle here on Tesla. So, break above that, and um, yeah, it could be off to the races. So I just want to see that move back above
See
240.
what you
Anyway,
did
let's move
there.
on.
Let's go over to SOX, SOXX for Winston.
Yeah, that's kind of been the place to be, the semiconductors. Um, and it took off again. So it did pull back a bit with most of this market in the beginning of January, came up, consolidated itself very nicely here. And then, that's almost the launch pad effect. We haven't talked about that in a long time, Zach, but all this sideways stuff here and then blast off. And I don't think the semiconductors are done. Money's moving in there. The DMI is reset up as being very supportive. The wave algorithm likes something between 640 and 660. And I think barring some sort of a breakdown completely in the market, I think the SOX hits that level. It's garnered an awful lot of new institutional interest here lately. A lot of people talking about the semiconductor space. So. Yeah, that looks good. Another good call.
All right, let's go over to UPST. Is it time to re-enter coming from
Yeah.
Louis?
Um, well, you're getting there. Um, it's still in a pretty well-formed wave five pattern, but my goodness, there's a lot of support right through here, and it held at 30. You can see that all through the fall, going all the way back to the summer. So, a break below 30, and you just, who knows where it goes. Another Katie bar the door if it were to break through 30 there. Look where that wave five is, down around 10. So it needs to hold 30. So far, it has. It got back above the 10, 30, and 50-day moving averages. So it's trying. It's trying really hard. It's going to bump its head a little bit right in through here if it makes it up into this range in the 45 area. So it's got some work to do to get back up there, but it's giving it a go. And I think it bears watching. I don't think I would do anything with this yet, but it would be a good one to keep an eye on because if it can break above 45, it probably test this high back from the end of the summer again. And that could be one heck of a run. And if it breaks below 30, then it's a good short. So we're kind of in that in-between range right now. So it's kind of a keep an eye on it, watch and see type of thing for me right now on Upstart.
Very well. Tony would like you to look at Cisco, first signs to determine if an equity is about to come out of a range.
Um, Gosh, we haven't talked about Cisco in a long time. Um, I think that was a bad earnings day here. Um, and then the issue here is it's come back up and filled the gap. So, gaps get filled, and we talk about that all the time. And our data shows 94% of gaps get filled. It's not 100%, so not all gaps get filled, but most of them do. You just don't know when. This one's taken a while, but it's managed to do it. It's got a little resistance here. It's still in a decently formed five-wave pattern, but if it can break back above 52, I think that goes away, and we relabel this and see what happens. So once again, I would want to keep an eye on it. I wouldn't go long until it broke above 52 with a follow-through day, and then I think you could have a bit of a run here. But it could also just be filling the gap, testing resistance, and roll back over and that five-wave pattern play out. So, it just depends on what it does with 52. 52 is the key. Break above it and you're long. If it rolls over, I think you're short.
All right, let's go over to UEC.
Really interesting chart, though. Uh, Uranium, we hadn't talked about that for a while. Really impressive move back here. Great consolidation through the 6.5 level, broke up. Let's see what the DMI, the positive directional indicator has come down, but this is one I don't worry about that. When the positive directional indicator comes down a bit through consolidation and the negative directional indicator also goes down, that just tells you that the buyers are taking a pause, but the sellers aren't really stepping in. So the shorts they're not coming in and trying to make a play for this or anything along those lines. I think they'd be crazy with that breakout move anyway. But I think we touched the 10-day moving average on the low, so we might be seeing higher moves here in UEC as well.
All righty, let's go over to QS.
Another one we haven't looked at in a while, QuantumScape. And ooh, that's not what you want your chart to look like. That's not good. Um, but what goes vertically up? What happens, Zach?
Off it comes vertically back down. Sorry, you caught me mid-typing.
Oh, yeah, I know you multitasking, doing 18 things at once over there. So there you go. Is another example. Back in July, did the same thing. So I tried again and got turned back once again. Now, this one does have some support right where it is, right in this area around 7. And even if it were to break 7, it's got more support at 6 as well. So right in through this area between 6 and 7 looks supportive. So if you had some speculative money, and you wanted to try something high risk, but potentially high reward, as you can see from some of those big bars, you could take a shot at this one as long as it stayed above 6. If it breaks below 6, then that's a whole different story. But especially if you wanted it and you wanted a real tight stop, just keep an eye on the 7 level. Don't put that stop in at 7 or you're going to get taken out. The market makers will see that and they'll figure out a way to get it to 7 and take it out. Just watch it, make it a manual stop or a mindful stop, not necessarily putting one in on your trade. Otherwise, they'll stop you out. But yeah, I think if you had some high risk speculative dollars, you could take a shot there. Again, high risk, but high potential reward as well.
Well, speaking of what goes vertically up, often comes vertically back down. Let's check out Visa. I think that's happened a few times in that chart.
Um, you know, it's all yeah, relative, right? It for whatever reason just won't go in a 45-degree angle. It just insists on kind of consolidating and then taking off again. And you're right, it's in one of those right now. Can it hold up here? It's got earnings coming out pretty quick here, the 25th, so 2 days. Um, and, that could bring it right back down or it could take off again. The ADX showing that move was strong. So although it went touch vertical for me, it was a strong move. And we'll see if it can hold it into earnings. But understand that with that vertical move, if you try to hold it through earnings, you've got some risk there. Now, it may have a great earnings report. And even if it has a great earnings report, is it already baked in? Is this in anticipation of a good earnings report? It could be. So it could be a buy the rumor, sell the news. So the fact that it's got earnings so close is really concerning to me on this. But if you were in it, we were a while ago. I think that got out back in December, so got out too soon. But we got the first part of the move right in through this area. I think we got out here when it made this spike. And that's the example you're talking about there, Zach, when it had 2 vertical days and then right back down. That's what happened. We got out on that spike. And, with the extra time it's taken, I'd like to go back and look at the option price that we got to close it out and see if it's much different because there's a lot of time decays occurred even though the stock price is higher.
Well, would you look at that? Right on time, and you provided us with an extended Q&A. So I think I speak for everyone in saying we deeply appreciate that. We'll wrap up this session by saying we appreciate everyone for attending live. It's great to have that interaction with everyone. And for the last symbol of the evening, we'll ride on out of here with Uber.
Uber. All right. I saw what you did there, by the way.
Thank you. I needed some acknowledgement.
So Uber broke above that wave 3. It's got a little resistance there at 65, but it's holding above the 10-day moving average. So I could even see it give the wave 3 high away, but I would want highway. That's almost a highway. But I would want to see it hold in this consolidation through here from December. So 62.5 or so. So that would be, if it broke below that would be, I would get out. But as long as it stays above there, even if it comes back a little bit, I think that's okay. But it looks constructive at this point. So yeah, I keep an eye on that. But the stop is 62.5. As long as it stays above there, I think it stay long. I would imagine there's going to be some anticipation with everything that Uber's been doing. They seem to have been doing things right with this earnings report coming up. So you might get a run into earnings, and that would give you a nice profitable move and get out before earnings. But we'll see. But yeah, as long as it holds above 62.5, I think you stay with Uber. So Zach, you said everything really well. So not much else to add other than yeah, we do appreciate you spending your valuable time with us. We do appreciate it and we do value it. And hope everybody enjoys the rest of their week and look forward to talking again soon.